Welcome to the Fastmarkets Pulp and Paper podcast, with a summary of the most important developments of the week and in-depth interviews with industry experts and leaders. Today, our graphic papers editor in Europe, Andrea Venturini, will interview McKinsey & Company about how graphic paper producers can rebound from demand declines. After that, we'll feature an interview with Anthony Pratt, recorded during Fastmarkets' RISI North American Conference. And now, the key takeaways for the week of October 2 to 6, 2020. Recovered paper. Vietnam announced it will set restrictions on mixed paper imports with a plan to ban the grade at the end of 2021. Pulp. Klabin confirmed a $20 per ton BEK price increase in China, effective with sales in November. Construction works at Bracel's new pulp project in Brazil show total fiber production could be much higher than previously anticipated, with a recovery boiler able to handle up to 2.8 million tons of pulp. Graphic papers. In Europe, close to 3 million tons of capacity will have been taken out of the market by the end of 2020, and almost the same volume will be shut over the coming years, according to closure plans that have been announced so far this year. Packaging. Most European suppliers of brown kraftliner have informed their customers of a €50 per ton increase in November. Brazilian recycled containerboard prices skyrocketed in October amid lack of supply and surging demand. ND Paper announced it's implementing a series of transformations to convert printing and writing capacity to packaging grades at its Rumford division in Maine. Packaging Corp of America confirmed they will start producing high-performance virgin linerboard at its Jackson, Alabama mill paper machine number 3 starting in November. Chinese paper and board prices moved up in October on the back of seasonally strong demand. Finally, Fastmarkets RISI will hold its virtual International Containerboard Conference from November 4 to 6, 2020. It's not too late to register. Just click on the events section of our website, www.risi.com. And now, our first interview with Oskar Lingqvist of McKinsey & Company about how graphic papers producers can rebound from demand declines.
Good morning, everyone. I'm Andrea Venturini, news editor at PPI Europe. It's a pleasure to be here with Oskar Lingqvist, senior partner at the management consulting firm McKinsey. Oskar is based in Stockholm. He leads McKinsey Forest Product Practice, and he recently published, together with 3 colleagues, an interesting article, Graphic Paper Producers, Boosting Resilience Amid the COVID-19 Crisis. We're going to talk about it, and we're also going to have a look at what the market situation is in the graphic paper industry. So thank you, Oskar, for being here with us today.
Pleasure. Nice to be with you, Andrea.
Good morning. So the COVID-19 pandemic has badly hit the graphic paper industry. Newspapers and magazines decreased their pagination because of a lack of advertising, while printers and retailers stopped producing advertising material for almost 2 months. This resulted in a terrific drop of graphic paper consumption. How do you see the current market situation?
Well, firstly, you mentioned it in your question already. This has been an unprecedented, situation for the broader graphic paper industry. It has noted one of its largest, if not the largest, one-off drops that we've seen, I would argue, in the last couple of decades, maybe ever. And especially during the first and early second quarter of this year, we saw drops in the order of magnitude of, let's say, 20 to 30% of volumes, depending on geography and particular product. Right? We are seeing a little bit of a recovery, starting with the last months in September, October. But of course, as the quote-unquote second wave of the virus is re-emerging, and to some extent we're seeing a pullback or even reversion of openings, etc. There's of course a risk that this drop continues on those very dire levels.
Okay. Do you think the second wave of COVID-19 will have similar consequences to the first one, or will it differ in some way?
Well, I think firstly we don't know yet, because I think the governmental and regional and company level response to this the second wave is in the making. What we probably do know is that any, let's say, rapid bounce back of graphic paper demand will probably go slower, right? So you will not have, let's say, 10 percentage points of the 20 or 30 lost that all of a sudden return. It is likely, though, that we won't see the same black and white close downs, or we will not see the same black and white response by advertisers, etc. But starting from a very, very low level. So clearly, we will see a prolonged, let's say, crisis and volume drop in graphic paper. Will it be as dire as it was in the early part of Q2? Probably not.
And do you think the pandemic will accelerate the already existing structural decrease in graphic paper demand?
Yes, this is probably one of the most important takeaways also of the piece we wrote, because you could argue what's really happened here in the matter of months would maybe otherwise have happened over X number of years. We as McKinsey have worked a lot at what we would, for instance, call in our lingo future work, which has the predictions of how workplaces will change in the future, how different tasks will change, how much will be automated, how much will be digitized, etc. And lots of the scenarios we put out a couple of years ago, we just saw fundamentally being accelerated throughout the pandemic. So actually, more so than anything new being added, you're seeing these trends being accelerated.
Can you give us some examples?
Yeah, there's several, and for most, I would guess they're not unsurprising. I mean, the most obvious one that everybody keeps talking about is, of course, working from home, and how that impacts printing and writing papers, especially from a copy paper standpoint. It's very clear we do actually consume less paper if we are remote working, and by any means, scenarios coming out of COVID are likely accelerating those type of digitalization trends, maybe through slightly different mechanism, being working from home than was thought originally. But you're getting to points of paper usage that was in line with endpoints, maybe 5, even 10 years out in some cases. Another example is, of course, if you look at what we would call just administrative tasks. Lots of companies have been running under, let's say, fumes and trying to make these work. In some cases, has led to a faster automation, or even maybe more interestingly, a prioritization of tasks. So I think you will see certain tasks, certain administrative tasks actually going away just because people reinvent ways of working. And again, that happening quicker than expected. Of course, things like digital learning, sharing of information more broadly, is also then requiring less printed paper, and is another factor that has driven this short term, and we believe will actually stay in the long term.
Okay, and what actions do you think graphic paper producers should take in order to remain competitive in this stormy market?
I mean, on the highest level, you should divide it into two types of actions. So one is the structural or portfolio question, which I believe we'll touch upon a little bit further, which has to do with, which assets do you keep, which ones do you close, which ones do you possibly convert, etc., which has been a top priority of the industry for many years. And you could say this is just putting it into a much accelerated and more challenging, time than would otherwise have happened over, let's say, 10 years. We do see, really proactive graphic paper players exploring a number of, I would say, more operational levers, broadly grouped into maybe 2 or 3 sub buckets. One being, how you can, what we would call, relentlessly focus on cost and cash. So this is the time for redoing your zero-based sizings of your organization and your processes. This is where you challenge: are we actually in need to build up or not to have certain support functions or let's say mechanisms that we thought we would have before because we were actually a much more sizable company. This is the time to really go after new ways of driving up OE and reducing product cost in the operations. That's one sub bucket. Another sub bucket is commercial excellence, which of course is very, very tricky in the traditional sense. If you think about commercial excellence as, we're pricing up or we are just selling more volume, that's of course very difficult. Now, what we have seen individual assets and certain companies do is, of course, trying to be really smart and quick around which are the sub-segments or niches where we see the lowest amount of drop, specialty papers or, where paper meets packaging, so to speak. And can you do something there? Can you work on the terms and the way you actually do your commercial agreements to at least protect some of the quote-unquote market leakage and margin leakage you would have normally? And that, of course, brings us to the third point, which is a little bit linked, which we call diversification opportunities. So is there a way for us to shift from the more traditional broad-based, let's say, graphic paper products we're producing, and without necessarily doing the full conversion, can we do a slight shift of our product mix, at least to some degree, to actually safeguard some of the volumes and put ourselves in a market that is less commoditized and less in a downward spiral.
Yeah. Okay. And in terms of, you were talking about strategic review. Many graphic paper producers have already announced plans to either close or convert paper machines. Do you think these announcements are enough to rebalance the market, or further capacity curtailments will be needed?
I think the very simple answer will be clearly not. And what am I basing that on? Well, if we think about it, at least my rule of thumb is that graphic paper is give or take 100 million tons globally today. Last time we looked, and we might get these numbers slightly wrong, and there might be more planned. Many companies, including those like Sappi, Domtar, UPM, SCA, Stora Enso, and others, have announced that they will take out capacity order of magnitude slightly below 5 million tons. So that's about 5% of the market. We are talking about momentaneous drops of 20 to 30, and we would argue probably closer to 30% this year. So even if there is a bit of a bounce back, you will still be on a trajectory which shrinks then probably, give or take 5 to 10% per year. So clearly this is not going to be enough over the long run. Now the question is it enough to stabilize some behavioral parts of the market this year? Is it enough to, in some parts of the market, some geographies, take bigger steps? And that could be the case, but generally over time we expect this to be probably a 2 to 3 time, maybe even 4 time higher capacity share that needs to be eliminated.
Okay. And many of these companies announce plans to convert machines to containerboard. But will the containerboard market be able to absorb all this new capacity coming from graphic paper in the coming years?
Yeah, that's a harder question to answer. And why do I say that? Well, clearly there is going to be growth in both test and kraftliner, fueled by general packaging trends, fueled by e-commerce exploding, and to some extent the flip side of graphic paper, if you will. Now the reason why it's hard to say is, I think, twofold. One is any conversion is competing with new constructions, first of all, and any conversion is also has to be competitive in the sense of being a good asset. And then lastly, which I think is even more important, any conversion will play quite often in a sub-regional market. Mm-hmm. Even if you look at a global quote unquote supply demand view, and you would say we will see a growth of maybe even up to, I think we made some estimate, it could be 3 million tons added in the next years, right? In which part of the testliner and kraftliner market, the ability to absorb will be very different. So this is unclear, and there is of course a risk that the pulp and paper industry does what it often does. It flocks itself to an area where there is some growth, and unfortunately we decide to make that part of the market slightly less attractive by flooding it with supply. So this is going to be an important one to follow.
And which other segments you think that could be attractive for graphic paper producers beyond containerboard?
Yeah, I think I would still, within containerboard, mention kraftliner, which is of course a segment that's only suitable in certain geographies. You need to have the softwood fiber access, etc. It's been, compared with testliner, a smaller market, at least in Europe, and even in North America, where it's more dominant. You could say historically it's been a market where if you add supply, demand sort of follows. So if you're able to do smart conversions into kraftliner, that's been a safer bet than testliner historically. Same goes for cartonboard, so the consumer part of virgin packaging. It's also one where, at least if we were to predict in our research here, that we might see more capacity going into cartonboard than we've seen in the last 5 or so years, at least as a percentage of conversions. So that's another one. And then, of course, whether you call it a conversion or not, we always mention it that of course there could be mills that decide to convert in the sense of only producing pulp, and let's see if we see that business model actually emerging in the case of paper machines that are not suitable for conversion or other constraints that enable our companies to sort of speak only stay with that production. That's another opportunity.
Mm-hmm. So there are quite a lot of opportunities for graphic paper companies. Do you think these companies can look at the future with hope despite the current economic and pandemic situation?
I mean, being in the industry for this long, I think the answer would still have to be yes, because I mean, this is not an industry that is facing its first crisis, right? We are giving a number of or a set of numbers that are quite dire, but you could also say this has been an industry that's been facing, more than 5% volume drop since the early 2000s, and we still have had many players making very good returns and especially good cash flows in the graphic paper segment. We would say it's probably going to be a bit of a mixed bag. We didn't put this so clearly in the article, but clearly there will be some players who can excel by being quote unquote the last man standing players, who are relatively well positioned on the cost curve, who have a commercial model that they can tune and actually win in, and then who are present in markets where they can still make decent margins, although it's a challenging segment overall. So that's probably one segment of players who will win, who will double down on graphic paper and do it really well. You will then probably see some others who are successful in some way stepping away, at least in part, and doing that without, and I think this is important, just spreading themselves over too many areas and becoming an unwieldy conglomerate with not the leadership position anywhere, which is going to be a fine balance. And then, of course, I mean, and this is where I guess the future will have to hold. We will probably see players who will be struggling, who will try to do, by force or because they don't see another way, doing all of what we discussed here and maybe struggling to execute on it. And then, of course, it will be very challenging. And that's always been the case in this industry, that you see some players struggle that way, and this will not be a difference or a different situation, we believe. But yeah. By that, I want to say it's clearly not so that we believe every graphic paper player will have a great future. On the other hand, we're not seeing a doom and gloom scenario for every player either.
Mm-hmm. Okay, perfect. Right. So thank you very much, Oskar, for the interesting chat and for taking time to discuss the situation with us in the graphic paper market. So take care and stay safe.
Thank you, Andrea. Same to you.
And now we'll feature an interview with Anthony Pratt, recorded during Fastmarkets RISI's North American Conference in October.
If I could, just a couple of quick questions before we move on to the CEO panel, and thanks very much for being part of that, Anthony. Yeah, you mentioned a little bit about the internet, but yeah, what is the internet, if you look forward the next few years, doing for the corrugated industry, and how big can it be, I guess, would be the direct question. Please.
Well, I think eventually, in the same way that the movie theaters are still around, but only 20% of what's viewed in the movie sense are in movie theaters, and 80% is viewed on television. I think that eventually 80% of food that we buy will be delivered to the home. That's my opinion, and I think it might take a long time to happen, but I think it will eventually happen. Therefore, our industry has a challenge to become the package of choice rather than plastic, or rather than other forms of shipping things. And, there's $45 billion of damage of goods like television sets that arrive broken at people's houses when they order them online. And I think the corrugated box is the only way to travel in order to save that $45 billion of stuff that gets broken, whether it's toys or television sets and things like that. And so I think corrugated boxes are the best balance, provide the best balance between protecting the product and being low cost. And, therefore, I think that corrugated is well positioned to be a major player in online retail.
And then Anthony, just taking that maybe the next step forward, yeah, what does the corrugated industry need to do to remain competitive and relevant? And you partly touched upon it, but yeah, please.
Well, I think that there's a few things. First of all, on the marketing side, the digital revolution is going to touch every company in every industry. And the corrugated box industry has to adapt and thrive in the digital economy. And I think in order to do that, there's a marketing component, and of course there's, as always, a cost component. On the marketing side, I think that personalized printing and making every box unique, so that when you open the box, you know, it might be happy birthday Greg written on the inside lid of the box. It's personalized printing, which is digital printing. On the cost side, I think it's terribly important that our industry continues to relentlessly reduce its costs. You know, the price of cotton is 1,000 times lower today in real terms than it was in 1776. And that's the reason that cotton is still the fibre of choice and has not been replaced by the onslaught of other fibres. And in the same way, corrugated needs to continue to reduce its real cost over the years, over the next 15, 20 years. Because if it continues to do that, we will continue to remain relevant. And on that subject, I think that, you know, one of the ways obviously is the raw material we use has to continue to be inexpensive. And the second most important, another important dimension, I believe that one day there will be the lights out factory, which is to say that, you know, the reason it'll be lights out is that robots don't need lights. And therefore, I think that for all those reasons, we need to continue to relentlessly reduce our costs to remain relevant.
Okay, very good, Anthony. And then one final one before we move on to the CEO panel, please. And that relates to what we've seen here in America, as you know, in June, July, August, where the U.S. Actual box shipments were, you know, in that 3-month sequence, the second highest in the last 30 years. Yeah, were you surprised at all at how essential corrugated appears to now be? Yeah, did that surprise you at all, or not really?
Look, I've been predicting the Internet of Food. As you know, we do a lot of work with the food industry. We support the food industry in America and Australia. And because, you know, 51% of all corrugated boxes are shipped to the food industry. And I've been predicting the Internet of Food now for quite some time, before COVID. And therefore, I wasn't surprised. I think that, as I said earlier, I think there's a tremendous, you know, corrugated is a brilliant product because it's sustainable. It's a plant-based product, plant-based packaging. And as I said, it's the best balance between protecting the product inside it and cost. And let me just elaborate on that in one small way. My grandfather, who started Visy, which is now Pratt, his name was Leon Pratt, and he was an orchardist when he came to Australia, and he was packing oranges into wooden crates. And he worked out that corrugated boxes would one day replace wooden crates to pack his oranges. And so he started a box factory. In that same way, corrugated today remains the best balance between protecting the product inside it, it's strong, and yet being cheaper than wooden crates. So that is the key to our long-term viability. And I think that's why corrugated continues to boom today. And that's why I'm not surprised at all that the corrugated market is booming.
Okay, excellent, Anthony. Thank you very much. Again, a big congratulations from us at Fastmarkets RISI. The analysts, of course, chose you as the North American CEO. So congratulations for that. And I'll just put one other side note out real quick before we move on to the CEO panel, please. I of course follow you, Anthony, on LinkedIn, and I would suggest to our customers that he puts up very interesting information related to business and goals and really thinking, and so it's worth it to take a look at and possibly following him. So anyway, again, congratulations, Anthony. Thanks very much for your time, and onward we now go to the CEO panel.
Thank you for listening to this demo episode of the Fastmarkets Pulp and Paper podcast. We'd love to get your feedback on content, format, or any other aspect of this demo episode. Please send your feedback by email to me, Matt Graves, at mgraves@fastmarkets.com.